Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. The channel continues to grow because of people like you. We are very close to 1,000 subscribers. And for those of you who may be stopping by for the first time on the channel, well, we focus on dividend growth investing here, and it's not rocket science. In my opinion, the best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, dollar cost averaging, buying dividend growth stocks, and growing companies with positive cash flow that covers the dividend, and companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing in the stocks within the portfolio on a weekly basis. I also do larger purchases if I get a bonus or do a side job, run into any extra funds. I cover all my investments into the portfolio on this channel. I do not have a paid Patreon account. I don't have a paid paywall. I don't have any other services I'm trying to sell you, no courses to sell, no other websites for you to visit or sign up for. It is completely free to see what I'm doing on this channel. Today's video, we will cover the $1,573 I added to the portfolio, as well as any options I was in for the week, any dividends paid out, all the activity in the portfolio. Again, it is free to see what I'm doing, but if you would like to help me out, before we get into the video, if you would take a moment to hit that thumbs up button down below. If you find any value in the content, make sure you are subscribed to the channel. Again, really close to 1,000 subscribers. Help me get over that 1,000 subscribers mark and beyond. Hit that subscribe button. Make sure you join us on this journey to financial freedom. Join the Vested Interest community. Hit that notification bell so you're notified whenever we put out any new content. On top of the portfolio updates I do every Sunday morning, I also do a stock pick of the day series Monday through Thursday whenever the market is open. If the market's closed like this week, I know this week was a short week with 4th of July. I did not do a video on Wednesday because 4th of July it was closed, and I did not do one Thursday because that was 4th of July. So again, it's always on the days that the market is open or will be open on the next day. I do not do them on Fridays because it doesn't make sense to do a stock pick of the day video when you can't jump in the market on Saturday and buy anything. Really, again, really appreciate everyone who's taking the time to do that. That thumbs up button, hitting the subscribe button, the notification bell, make sure that is rung as well. That really does help a small YouTube channel like mine grow. Now let's jump over. First, we will start with options. And unfortunately, this week, like a lot of weeks this year, I did not get any options to hit. Again, I am being pretty conservative on options. I do not want the positions to be called away. So when I get them to hit, it's great. When I don't, we'll continue again. I tried to throw the Johnson & Johnson one. Again, it looked like it pulled back even further down into 145 range. I think I set the strike price right back at 149 again, trying to run that wheel, but it didn't hit. I also threw up the BABA position again for an options play. Kraft Heinz was one I tried to run an options on. Cisco Systems was one I tried to run an options on. There were 4 or 5 I tried to run options on, and they just did not hit this week for whatever reason. Now, even though we didn't get any options to hit, we did get some dividends. They came in on July 1st, July 2nd, and July 3rd, and we received a total of $113.57 in dividends. The first up was SCHD. This is the Schwab Strategic Dividend Growth ETF here, ticker SCHD. This is one of the ETFs I buy weekly. I believe this was either our first or second payment from them. We received $23.14. And we do have the DRIP set, dividend reinvestment plan, which just means that anytime a company or ETF in this case pays out dividends, those funds, this $23.14, goes right back in and buys more shares of that same company, or in this case, ETF. So we picked up 0.29626 more shares of SCHD with those funds. Vanguard index funds, the total stock market ETF here, ticker VTI, also paid us out dividends on the 2nd, $24.79, and those funds went back in and picked up 0.09262 more shares of VTI. And HP Inc., ticker HPQ, paid us $65.64, which bought 1.87874 more shares of HPQ. The $113.57 and the new shares that it picked up added an additional $3.23 in passive income. Now, the first new capital of the week we put in on July 1st. This is whenever we went in and tried to run those options plays on the first of the week there, Monday. We added $1,120.46 to the portfolio. With those funds, we picked up one share of Procter & Gamble, ticker PG, out of the consumer staples sector. This is one on our stocks to buy in July video. Actually, most of these here, Starbucks, Comcast, Cisco, are all on our stocks to buy in July video. So tune into that if you haven't watched it. We picked up that one share of Procter & Gamble at $162.98. We're continuing to build out our Starbucks position, ticker SBUX, out of the consumer discretionary sector. 6 more shares there, getting close to 100 shares. I think we're at 90 now. We picked up those shares at $78.08 per share. I think this one also dropped back by the end of the week down to $76 or $75 per share. So I'm liking that. I like that companies pull back whenever I'm trying to build them out so that I can add more at cheaper prices. Excuse me. Bring down my average cost per share, bring up my dividend yield, and bring up my potential future return. 4 more shares to our Comcast Corporation position, ticker CMCSA. This is out of the communication sector. Picked up those 4 shares at $38.92. Cisco Systems, ticker CSCO, out of the information technology sector. We added 4 shares there, $47.56 per share. And last but certainly not least, on July 1st, we did add to our Cisco Corp position as well, ticker SYY. Out of the consumer staple sector, we picked up those 2 shares at $71.56. Now this $1,120.46 and the new shares that it added an additional $33.14 in passive income over the next calendar year. Now we weren't quite done. We did go back in on July 5th and added an additional $453.21. We picked up 2 shares of Realty Income, ticker O, the monthly paying REIT. We picked up those 2 shares at $52.56 per share. And we added to our weekly ETFs as well. Our Schwab Strategic Dividend Growth ETF, ticker SCHD, we added 1 more share at $77.13 per share. And the Vanguard Total Stock Market ETF, we added 1 more share, ticker VTI, at $270.96. The $453.21 we added and the new shares that those funds picked up added an additional $12.80 in capital over the next calendar year. And the total invested $1,573.67, which added $49.17 in additional passive income over the next calendar year. Now a quick run through the sector weights here. Communications is sitting at 10.23% of the portfolio. Consumer discretionary makes up 6.76%. Consumer staples at 6.37% of the portfolio. Energy makes up 5.82%. Financial sitting at 6.14% of the portfolio. Healthcare at 14.11%, the largest position here. Industrials 6.27%. Technology makes up 7.06%. Materials at 9.99%. Utilities makes up 9.77%. REITs and real estate still sitting in second place at 10.77%. And ETFs here is still the smallest slice at 3.71%, though it is starting to catch up to some of the other overall sectors in the portfolio. Over here on the right, you can see the sector weights. Here's the percentages as well, broken down just like the pie is, and also the funds allocated to each sector as well. Now here it is, my portfolio update. I show this every Sunday morning. I really want to be as transparent as possible, so those of you out there who may be on the fence or who are just getting started can see a real dividend growth portfolio built out over time. You can see the ups and downs associated with it. Sometimes you're going to be up, sometimes you're going to be down. There's going to be red in your portfolio. There's going to be green in your portfolio. Hopefully this, again, gives some of you out there who haven't started your own portfolio a little confidence to see an average person like myself. You know, I'm not a financial guru. I do not have a background in finance. I did not go to college for finance. I'm just a regular guy who goes to work every day. I'm a construction management is what I do. So I do understand numbers, but I'm not like I said, I'm not a market guru or spent my life in the market. My parents don't have portfolios where they taught me whenever I was a kid how to look at the market or anything like that. So if I can do it, you can do it. And that is the idea behind this. I want to show a real portfolio. I know a lot of people out there in the dividend growth space or the financial space in general, they put their portfolios behind a paid paywall or want to charge you to see what they're doing or want you to sign up for their course or sign up for some other site to be able to see what they're doing. I'm going to show you every week again. so that those of you who are interested can see a real portfolio built out over time, and those of you who may be just getting started hopefully get the confidence to start your own. So you can see here in this column, these are all the positions within the portfolio. Excuse me, the total shares, how many shares of each position I have here, current price as of the close of business on Friday, the market value as of the close of business on Friday, my average cost per share in this column, purchase price, how much I have into each position here, total return, whether I'm up or down. If I'm in the red here, you'll see it. So if I'm down, you're going to see it. Same thing here with the percentages, green or red. You know, red, obviously I'm down. I look at the red as a sale on that position, right? BABA, for example, if I was willing to pay $75.44, I should be willing to, well, that one's actually, it says down, but it should actually be up a little bit. But anyway, no, $74.52. If I was willing to pay $75.44, I should be willing to pay $74.52. Same thing here. MPW is the only one really I'm not adding to a lot. It's down the most at 46.01%. I am still nibbling from time to time. Pfizer, same thing. I'm probably going to add a little bit this coming week. Any of these positions I see red on, besides maybe Kraft Heinz and maybe a couple others where I'm actively looking to maybe trim the position. Kraft Heinz more, not because it's down, but because they have not been paying a dividend. You can see here in the dividend growth column is 0. Percent returns, what sector they fall into here. Dividend growth, whether they pay out quarterly, monthly, semi-annual. You also see highlighted in yellow. These are the positions that have raised their dividends already this year. And I want to talk about that for a second. Most recent updates here, Kroger, I believe, increased theirs from 29 cents to 32 cents. Bank of America just announced their raise, so I highlighted that one. Let's see, I think those were the two most recent ones. Besides SCHD, and I want to talk about SCHD and VTI for a second. Excuse me. SCHD just announced their dividend raise. Now, it is 82 cents and some fractions of a penny. I know I only have 70 cents and some fractions of a penny shown, but what I did here was I took the average over the last calendar year, including that 70 cents, because these change from quarter to quarter. They're not like some of these other ones that stay the same throughout, 4 quarters and then they might get raised, or Kraft Heinz that's been the same quarter for several years now. These fluctuate a little bit from quarter to quarter, so I just took the average, and that is the average over the next calendar year. And I know that's a little less than the 82 cents they are going to pay, or that they did pay, which is fine. So keep that in mind whenever you look at this total. It actually is a little bit less than what I should be showing. VTI the same way. I think they're actually at $1 or 92 cents, whatever it is right now. This is a little bit lower than what they're actually paying out, but it is the average over the last calendar year. So that's why I took those. I just took the average, and I'm going to run with that. But I did show that they actually did recently increase their dividend, right? So they did do their update on their dividend, but I just am going to take the average over the year. So whenever they increase it or change it next time, I'll recalculate the average and I'll plug it in again. Here's the current yield for the portfolio overall, each position as well as the total. My yield on cost, same thing for each position as well as the total. Portfolio weighting, so what we saw on the previous page was the sector weightings. Here's each individual position's weighting. And I don't like any one position to be more than 10% of the portfolio. I don't think I have any that are close, especially with J&J really pulling back again, down 146 now. Again, I tried to run the wheel on this one. I think I put in a $149 strike price and it just didn't hit. Probably because it pulled back, but that's the way it is. Estimated annual income in this column, the payout months, the dividend growth year over year, and where they sit at 15% of a 52-week low. I think I've talked about this every time on the channel, so hopefully you understand what that is. So total shares, I have 6,821.105 shares. Market value of the total portfolio, $260,051.29. I have $252,943.65 of my own funds into the portfolio. I am currently up a little bit, $7,107.64, or up 2.81%. I don't focus on this as much. Yes, I like to see my portfolio in the green. Don't get me wrong. It's not that I want to lose money. That's not the case. I just don't focus on this as much. I'm not wanting to sell out of my positions, right? My current yield here, 4.417%. My yield on cost is sitting at 4.5 541%. And this right here, why it's circled in red, this is what I focus on. The estimated annual dividend income from all the positions in the portfolio continues to grow, whether the market's up, whether the market's down, whether the market's floating sideways, as I add new capital, as positions in the portfolio pay out dividends, like we saw with VTI, SCHD, as they pay out dividends, as they raise their dividends. Again, this continues to go up week over week, month over month, quarter over quarter, year over year, and currently sits at $11,486.86. And we will probably not get to the $12,000 mark or $1,000 a month by the end of July. I was really hoping we would, but a lot of the positions I've added or I'm going to be adding to for the month of July are not real high paying yielders. So Union Pacific, for example, I'm going to be nibbling on. It only pays about a 2.31% dividend yield. Procter & Gamble, same thing, one of the lower payers at 2.44%. Cisco I want to add to. They pay a nice dividend, 3.43%, and Comcast pays 3.28%. But they're not like some of the others I was adding to, like Pfizer, with a 5.99% dividend yield, or Starbucks has a decent dividend yield at 3%, but it's not as high as some of the other ones. Verizon's I had added to a little bit at 6.45%, Enbridge 7.56%. So it's not like I'm adding to some of the larger positions. HVT, I might add a little bit here though, 5.45%. So that might juice the dividend yield a little bit here and try to bring up this 4.494%. But I'm not adding to a lot of the higher yielders this month. So I don't think we're going to jump over the 12,000 mark. Looks like we might hit that sometime in August, which is okay. It is what it is. Dividend growth is sitting at 5.72%. So if I was to stop adding to the portfolio, this is what it should grow as far as dividend growth year over year. Now this will fluctuate a little bit because obviously they do not maintain the same growth. Like some of these companies that are paying 21.47%, they are paying very high dividend yields now, but I would suspect as they start to get closer to that 100% payout ratio, they'll back off. Same thing here with Valet. This one fluctuates because they're a semi-annual payer. I think one time a year they pay a pretty high one, and the next one they pay a lower yield. So we'll see what that sets at as well. But there it is, folks. Let me know, do you have some of the same positions I have? How is your portfolio doing? I am seeing overall, it's funny to watch VTI continue to grow. So the overall market continues to go up, but then you look inside the market and you see a lot of red, right? A lot of opportunities to buy, a lot of opportunities for myself to continue to decrease my cost basis, bring down my cost basis, bring up my dividend yield, and bring up my potential future returns. So that's what I'm doing in these positions that are showing red right now. Let me know what you're buying for the month of July. Hopefully you had a happy 4th of July. Still in 4th of July weekend. I think we're going to spend some day on the lake again here later this afternoon. So hopefully you're still enjoying your weekend. And that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, and suggestions for future topics. So if you have a company you'd like me to cover in the Stock Pick of the Day series, or if you have any questions about my portfolio, any of the positions I have within it, go ahead and drop them down below, and I'll try to get back to you here. If not today, within the next couple of days for sure. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, and investing is for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.